So today we're going to talk about the 5 things that you need to look for when you're buying inside of an HOA or a homeowners association. So we get this question a lot, and a lot of times people buy into an HOA and then later they realize that there's all kinds of financial issues and or restrictions on the use of your property. The truth is, the HOA can be a financial wild card, but it can also maintain the integrity of your property. An organized, financially solvent HOA can help ensure that the common areas are maintained and that the aesthetics of the community are kept to a certain overall standard. That can be good if you're a homeowner. However, on the other side of that, a chaotic HOA can be irritating and very expensive.
A regular HOA meeting at Superstition Lakes condominiums in Mesa turns ugly.
What are you trying to accomplish with all this harassment and bullshit that's going on? Are you trying to destroy the community that you live in?
So here are 5 of the most important things that you need to find out before buying inside of an HOA or a homeowners association. So let's start by what a homeowners association is. It's basically an organization that oversees some kind of a planned community, and it's responsible for making sure that the common areas are properly maintained. They also set guidelines for noise, aesthetics of the property, where people can park, and many, many other issues. So when you're considering buying a property, it's very important to find out what you're getting into. So number 1 is obviously, can your property be used for a rental? Now this comes up on regular rentals and of course the hottest topic right now, Airbnbs or short term. And this could be the most important question that real estate investors need to ask. Even if it is going to be your primary residence right now, that could change in a few years and you may want the option of renting later. Also, some HOAs allow long-term renters but do not allow short-term. Please make sure to find this out before you buy. And also make sure that you check out the webinar with Daniil and the Airbnb experts, because their recommendation is that you don't buy any property inside of an HOA. 2, what are the HOA's rules? Now this can widely vary from community to community, so it's very important that you dig into the both bylaws and CC&Rs, which are the covenants, conditions, and restrictions. Inside of these documents, everything will be laid out for you. The CC&Rs, they lay out the rules for tenants and the penalties for violating the rules. It can also include things like property maintenance, dues, pets, parking, architectural restrictions, and information about dispute resolution. As you're digging into the HOA, be sure to ask your realtor for the HOA minutes and the financial statement for that HOA. The HOA actually collects dues and pays bills, and so they should have income and expense statements and financials for you to review. Be sure to read the minutes, because inside of those minutes can be golden nuggets of information that you can see on things that they're planning or having problems with before you buy. So you need to find out exactly what the HOA dues are and how often they're getting increased. And be sure to ask what you're getting for in these dues, and it should be all easily explained in their financial statements. As we're heading into these times of inflation, I can assure you that things like common area water, common area electric, and routine maintenance are going to go up, and therefore the HOAs are going to be spending more money, and it's going to actually make it into your monthly dues. 4th, how large is the reserve fund? Now think of this as a capital account full of money for things that you're going to need to do. So think of the roofs, think of the exterior paint, think of things like that. The HOA is responsible for escrowing every single month from everybody a certain amount of money and putting that into the capital fund or reserve fund, so that when time comes that you need a new roof, they're not doing what's called a special assessment and coming after you for that money. This is a critical piece, and this is what surprises most people when they buy into an HOA. On one hand, the homeowners do not want any kind of increases. On the other hand, things are going up, and therefore there's no money when you need it to do big projects. So make sure that they have large cash reserves for any and all repairs and that they're budgeted and well thought through. I personally prefer communities with at least 100 homeowners to help offset the cost of any type of special assessments. 5, I found this great cartoon, which I thought was funny. Need money, broke, lost my home. Need HOA fees, broke, no reserves, being sued, please help. This 5th issue is a big one, guys. So what this means is, are there any special assessments planned? So if there's capital money or replacement reserves like they're talking about here, but it's not enough to cover something like a roof. So let's say the roof's $100,000 and there's $50,000 in the reserve account. They are going to do a special assessment to you, to all the people inside of the community, so that they can do the roofs, pay $100,000, and they're going to send you an invoice. Special assessments occur when major repair is necessary and there just isn't enough money or funds to cover those repairs. Obviously, there is some negligence on the HOA not having enough money, but at the end, the homeowner pays the bill. The extra expense is definitely going to be passed on to you, and you do not want to buy into a community that has a reoccurring pattern of special assessments, and even worse, have high capital needs and there's no money to pay for those things, because that money is definitely coming from the homeowner. Be sure to check whether or not the HOAs can even lien your property for these funds, because they're going to move forward with things like the roof, even if you don't have the money. So don't let any of this scare you off in buying in an area with an HOA. I've owned many, many properties in HOA communities where the HOA was financially solvent and they did a great job of enhancing the quality of the community. But that's because I did my due diligence and asked the right questions first. Do not be afraid to ask questions. And if the HOA doesn't want to provide some or all of this information, you definitely need to keep looking. Make sure when you're budgeting and looking for cash flow that you guys know what your HOA fees are, and you know what the HOA has on reserve and any potential special assessments, because those things can wipe out all your cash flow that you make for an entire year. So be very, very careful and know what you're buying before you buy it. Until next time.